What is going on, traders? I hope you guys are ready. This is going to be the biggest week in the stock market, in my opinion, of 2022. Obviously, in July, the CPI data already came in at 9.1% year over year, much higher than the 8.8% projected. But the three biggest factors that are still outstanding that are going to be answered this week: number one, corporate earnings; number two, GDP for Q2, which will tell us if we are officially in a recession or not; and number three, obviously going to be the FOMC, the Fed meeting. We're going to know by how many basis points the Fed are going to raise the rates by. So I'm here to break it all down for you. Let's get right into it. All right, let's start with earnings. So on Tuesday, we have Alphabet, otherwise known as Google. We have Visa, we have Coca-Cola, we have Chipotle, McDonald's, and of course, the other big wig we have is Microsoft. On Wednesday, we have Meta, otherwise known as Facebook. And on Thursday, we have Amazon and Apple. And on Friday, we have the biggest oil companies with Chevron and ExxonMobil reporting. So with Alphabet, Microsoft, Apple, Amazon, and Meta, we have 5 of the biggest companies in the US reporting this week. Now, this is important because we are going to see what effect the economy, the interest rates, the inflation has had on these mega cap company earnings. We've already seen mixed earnings from the banks. We saw Netflix surprisingly give good guidance, even though their earnings weren't great. We saw Tesla beat earnings, miss on revenue, but also give good guidance. And so here's what I think could happen with regards to earnings. These companies could actually miss on earnings or meet expectations, but if they provide good guidance, I think that, all things remaining constant, would allow for the market to rally a little bit further. Now, this is obviously not taking into account what's going on with the GDP and with the Fed raising rates. So here's what I think is going to happen. With regards to the GDP, I think a recession is somewhat priced in. Now, not the extent of the recession. Now, if the market does officially fall into a recession, obviously I think that there's a chance that the market will drop. However, how long the recession lasts and how severe the recession is really going to dictate how the market reacts. Because remember, the stock market bottoms out in an average of 4 months before the end of a recession, because the stock market is forward looking, and recessions, the indicators that usually lead to a recession, are usually priced in and lagging. So the Q2 GDP numbers are coming out July 28th, conveniently a day after the Fed meeting, conveniently a day after the FOMC meeting. So the Fed will have a chance to raise rates before actually seeing what the GDP numbers are. Now, this can go one of two ways. Either the Fed will use the fact that they haven't seen the GDP numbers as an excuse not to go heavy on the rate hike, so they will likely do a 75 basis point rate hike in that event, or they will go all out, rip the Band-Aid off, and do a 100 basis point rate hike before the GDP even comes out, because this is the last time that they're going to get to raise rates before September. Now, 75 to 100 basis points is what is expected, so anything less or more than that, I think, has a chance to actually drop the market, especially if they do more than 100 basis points, which I don't think is going to happen. But if they do less than 75 basis points, that might also be seen as bearish because the Fed won't be taken seriously. So I expect them to go anywhere between 75 to 100, and I don't think that will move the market much. So remember, we have the big earnings Tuesday through Friday. We're talking about the mega cap tech stocks. Yes, we will have plays on those in the same way that we have plays on Tesla. I opened an iron condor on Tesla that I had to readjust a couple of times so far, but it is looking good. And I would likely have earnings plays on Meta, Amazon, Alphabet, Microsoft, and Apple as well. And then maybe a play on the oil companies. There might be a contrarian play there, betting that oil might drop due to the fact that everyone thinks that oil companies are going to have a stellar quarter due to the inflation that we've had in commodities. I don't know. I will be sending those out in the Traveling Trader Academy. So if you want access to that, click the link in the description. And then we have the FOMC Fed rate hikes on July 27th and GDP on July 28th. So keep your eyes and ears peeled. I will likely be going live depending on the internet connection. The last time I tried to go live in New York didn't go so well, and I actually had to cut it, unfortunately. So I will be trying to go live here. So make sure you tune into the channel. So I will try to go live for the Fed rate hike as well as the GDP reading. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up. Leave it in the comment section below. Let me know if you think we're going to get a negative GDP reading. Let me know what you think the Fed is going to do, whether they're going to do 75 basis points, 100 basis points, etc. If you're playing any earnings plays, also leave that in the comment section below. If you want access to the trades, if you want access to the courses, the Zoom calls with me, the chat with thousands of traders, click the link in the description and sign up. Would love to have you. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.